The market has defied expectations all year. During President Trump's first year in office, it continues to set new highs. The big question's what's driving the surge, and can it continue well into 2018? CBS 2 is stocking up.
Should you take your profits and go home?
That's the big question after a year that saw the S&P 500 index rise 20% and the Dow Jones Industrial Average up 25%.
It is now the second longest bull market on record.
This despite a gloomy prediction from some analysts at the beginning of 2017. So what's been driving this raging bull?
I think the big propeller this year is really about this global growth that happened all at once, all around the world. Corporate profits rising much stronger than anticipated.
Couple that with anticipated corporate tax cuts, deregulation, and a growing gross domestic product, and market expert Barry Habib says the economy just took off.
It had gone a long period of time without 3% GDP growth. It looks like we're about to either approach that or break that level.
Presidents have some effect or not much of an effect, but the economy is what really makes the stock market boom, more than Washington.
Corporate economist Robert Frick says by all indications, we can expect the strong economy to continue through 2018.
The unemployment rate is really low. The number of jobs per household is going up, so household income is up a lot. So people are spending, they feel confident about the future.
Another reason to feel confident, interest rates are also expected to rise this new year.
Which means that savers who have been kind of plagued by low interest rates on their CDs and their money markets and their savings accounts, now all of a sudden they're going to start getting better rates.
Yes, it can keep going, and it can keep going longer than we ever thought. However, the music does tend to stop.
And while none of the experts we spoke to think it will come to a screeching halt, this stock market could be in for a bit of a correction.
Anything can stymie the progress of a stock market rally, especially this far into it.
But there is one very important thing you can do to protect yourself.
Make sure you have a good diversified portfolio.
We love diversified portfolios.
I think diversity is very important.
Meaning don't have all your weight in the U.S. stock market, spread the wealth in foreign markets, bonds, smaller companies, and perhaps most importantly,
please don't invest unless you have a game plan. Have I paid down my credit card debt? Do I have enough money in my emergency reserve fund, 6 to 12 months of my living expenses?
Now, the experts we spoke to do agree having a liquid emergency fund is key. It can give you the security to invest in the market.